Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. This is Friday, and we've got markets.
The U.S. market's doing well over the past week. The Dow hitting a record high once again. What's behind that?
It's been a bull move for a long time. Technically, you can always say that in August we a little down dip, and we got a springboard buy on that one. But you can also have a seasonal coming into early September that's favorable, and then the one that we use that really keeps track of the pulse of the stock market, the advanced decline line. And this is the number of stocks that are going up relative to the number of stocks that are going down. And that has been a long, steady rise out of the last set of troubles, which was early in the year. And that AD line peaked in August 27th, and has been coming down, and this is now looking like a distinctive move. So what you had this week is, beginning Wednesday, a sharp rise in interest rates across the board from long end to short end, and from treasuries to junk. Quite a sharp rise. It was sort of hinged on some sort of a Fed statement, but hey, when you get this kind of a move, the market was ready to move. So you've got rising interest rates, and some of the spreads have widened a little, not much. But it looks like a weather change in the stock market, and I think it'll take a few weeks to determine whether, let's call it a seasonal change, and then maybe even a climate change, because the speculation has been remarkable. That is based upon sentiment numbers and momentum numbers, and then plus you got the valuation numbers, whether you do it against earnings or GDP or against the average wage. Stocks are at record highs, higher even than with the dot-com bubble in 2000. So it's always tempting, Jim, to think now, gee, it is a good story out there. Unemployment's record low. The economy is strong. Maybe stocks are overvalued and they can get to a better value by trading sideways for a while. And that's the old plateau theory that one of the better-known economists in 1929, Irving Fisher, came out with, and he says that stocks may be high-priced, but he had been playing the market up where the market would surge, and then it would hold a plateau for the while. And then he, right into September of 1929, was calling for the plateau, and I think it took until from 1929 to 1955 before the stock market made back the highs of 1929. So you have to look at reality, and we're looking at the market having recorded tremendous momentum surges, recording extremely high sentiment numbers and extremely high valuations. So it's vulnerable. And the vulnerability this week was a surge in rising interest rates, and with that, credit spreads have widened only a little, and the yield curve has taken a little turn to steepening, which kind of helped the bank stocks, but they usually do that. So I think the stock market is vulnerable, Jim, and this, as I said, is at the moment you can say it's a weather market. A few more weeks of it, you can say it's a seasonal turn, and then if it gets worse, you can say the whole climate has changed, and we'll be watching this over the next few weeks.
We'll have more with Bob Hoye right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Bob Hoye. Bob, the U.S. is seeing all kinds of money being repatriated. What's happening with all that extra cash?
Well, yeah, we know the reason why is that the climate under the new administration, well, actually 2 years now, for the climate for business has become much more friendly and benign rather than predatory. So corporations are bringing their money back. Now, what was bothering me over the last year were the occasional story about that some of that money coming back was doing stock buybacks, which has been very popular, and this is where the company takes its cash reserves, or for a while they were even borrowing money to do it because money was cheap, and buying their own stock. Now that reduces the number of shares outstanding, and if your earnings are not advancing, but you're making the number of shares less, your earnings per share go up. It's a bit of financial engineering. But in the last few weeks, there was a headline that caught my attention, is that executives or corporate insiders have been increasing the selling of their own positions. Like this, if you're a CEO at a company, you have to report insider trades, and the amount of selling by insiders is growing at quite a pace. And they can often be right either at a bottom or near highs, and I think the right is them. So you have money coming back from wherever into the U.S., which is constructive. Some corporations, too many of them, have been buying back their own stock, which is not constructive. And then more recently, you have some executives or insiders taking advantage of that and selling their stock into a corporate bid, which is a shareholder's bid. So that's that one doesn't look good, Jim. And there's no the article I saw provided no distinct examples of one company doing both at the same time, but it's happening generally. And you can will it earn condemnation? I don't know, but I would take it as a sign that if corporate insiders have picked up the pace of selling, they think it's a good time to sell, and they know their own companies. So that's another indicator for the stock market. Of course, as I said, is the financial side. We've had a tentative move towards credit spreads widening and the yield curve steepening, but it's not much yet. It's going to take a few weeks. The other one is what has been very helpful through the summer has been the firming of crude oil prices. And for years we've watched the seasonal action in crude oil, and I guess until about 7 or 8 years ago, the seasonality was reliable, whereby you could have a nice high for crude oil in late September, early October. And then for about 6 or 7 years, that sort of went away, where you might have had the high in around June. But anyways, this year, crude oil stayed pretty steady through the summer, and into September we got a nice rally, and it also got hit with Wednesday's drop in stocks and bond prices and stuff like that. So, but the help that crude oil gives to the market is that there's an awful lot of junk bonds floated in for the petroleum industry, and if crude's doing well, then the junk bond market's doing well. So crude going down. Now, this was part of our action of what we were looking for last February when everything got hit after the speculative high at Christmas time. And we were looking for industrial commodities to rally out till around June. That would be base metals, and they did. And lumber, which was fabulous, it had its own bubble, soared up to $650. Now it's in the 300s. So those would be friendly to the stock market, and they were. So anyways, the base metals and crude oil crashed. Base metals sold off. Lumber crashed and base metals sold off. But you've had this nice bid for crude through the summer, and it may have peaked in here now. But these tend to have seasonal lows. Like now, lumber is getting very oversold, and it can have a seasonal low in October. So maybe lumber has had its worst and might do okay for a while. But you can often have a seasonal low for copper in November, December, and then you see seasonal lows pretty reliable for crude oil in December, January. So this is going to be a depressant on the ability of the bulls to keep the stock markets elevated. So we're watching it with interest, and the path that we outlined earlier in the year has worked out reasonably well. And it was after August when we figured the sunshine in the markets would turn to twilight. And then in the fall, where we are now, there was the possibility that we go into the twilight zone, which was that very scary but good quality TV show from ages ago. So are we in the twilight zone, Jim? Well, it's could be, but not yet. As I say, it's another one of these things that's going to take another week or so to determine if this hit this week continues, and we'll be watching it with interest.
We'll have more with Bob Hoye right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, what do you expect will happen with the U.S. dollar and the Canadian dollar?
Yeah. The Canadian dollar, it has had a negative going on it. The federal government, when the Liberals won 2.5 years ago, they unfortunately dropped right back into the late 60s socialism, where their genius was going to run the market and the economy and everything else, and that would be was a threat to the dollar, and it sold off down to 68. And then this year, for part of the year, the support for the Canadian dollar was the firming industrial commodity prices, including crude oil. But the new NAFTA deal has been more or less concluded, and I think it's going to be happy enough for both sides. The problem, of course, was the Ontario and Quebec's infatuation with marketing boards. Dairy products were such that Canadians pay 100% more than they should to keep 10,000 dairy farmers happy in Canada. I mean, it's an absurd situation. But the other one, that the weakening commodity price, of course, would be a negative for the Canadian dollar. But the other would be just the return of socialist policies in Ottawa, which is a terrible negative. But you've had probably the start of the popular uprising that we've seen in the United States and seen in England with the Brexit movement, whereby people just see that there's far too much government in your face government, and in your wallet government is getting to be too much. So with the election in the province of Ontario swinging over to the Conservatives, and the Premier there, Premier Ford, is actually doing conservative things and trying to shrink the influence of government. And then also last week you had a startling election in the province of Quebec, where a smaller government party came in, and we'll see how that goes. So it looks like the start of a popular uprising in Canada, and I hope it continues to be polite, whereby you can change the countenance of government from predatory, grasping government, and then the line I like to use is in your face and in your wallet government, and this is a change. So the net result is that the Canadian dollar may not be as weak as it would have otherwise. And on the U.S. dollar, it confirmed in previous post-bubble contractions, one of the problems has been is that the senior currency becomes chronically strong against most other currencies and most commodities for most of the time. And I think this is probable. You've had the rally from 88 early in the year up to 97, correction back to the 93 level. That's on the DX. And now it's sort of around 95 and looks like it's poised for another move. So the dollar, U.S. dollar, one of the reasons why the senior currency firms in a post-bubble contraction is that a lot of the debt written in the bubble is due and payable in senior currency terms, i.e. now the U.S. dollar, into the financial capital, which is New York. So there's all of the debt that's written is effectively a short on dollars. And then the other one is a preference by the careful money when you can no longer make money in stocks and bonds or commodities, then the careful money goes to the most liquid items, which is short-dated, treasury bills, anything shorter than a year in the senior currency, which is the U.S. dollar. So you'll have a bid for the dollar that way. Now, the other one that gets interesting is that gold is a great place for liquidity, and there'll be a bid for gold, but it'll be offset by a bid for the dollar. So we've been talking about this since earlier in the year. and could not see the bullish statements about gold in U.S. dollars. But if you're in a lesser currency and that currency is going down, of course you'll make money in gold. But the ideal place, the way to make money in precious metals has always been to trade the gold stocks. And there's a great opportunity coming, Jim, but we would just stand aside until that opportunity arrives. And I think our technical tools will be able to catch it as it happens. We've been right on the precious metals for this year, so hey, hopefully we catch the bottom.
Bob, thank you so much for chatting with us.
Well, good to be with you, Jim, and look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.